got some wonderful deals and some terrible deals. And the nice thing about it is, as I pointed out, this doesn't really apply in the case of precision precisely, but when we're disappointed in a business, it usually becomes a smaller and smaller percentage of our business just by the nature of things, because it isn't going anyplace. And when we get a successful business like a Geico or something of the sort, Geico's doing, they're doing 15 times as much business as when we bought control in 1990. They're doing 15 times as much business as when we bought control in 1990. They become a proportionally, through just natural forces, you get more of your money in the things that have developed more favorably than you thought. You get more of your money in the things that have developed more favorably than you thought. Charlie would say, it's not like having children. I mean, the ones, the bad ones cause you more problems. But in the children of businesses, the small ones kind of, by the way, we started with 3 businesses, Charlie and I, and Berkshire was textiles, Diversified Retailing was a department store, and trading stamps were Blue Chip's business. And those were the 3 companies we put together, and all 3 of the original businesses failed, which sort of gets me in terms of the people that are worried about don't we know that coal is going to be phased out over time? Of course we know coal is going to be, but that doesn't mean we're going to be phased out over time. I mean, that every business has some things to think about that way. The biggest danger, they have that section in the prospectus called, what do they call that? About certain
risk factors.
But risk factors, yeah. The number one risk factor, you never see it. The number one risk factor is that this business gets the wrong management, and you get a guy or a woman in charge of it that they're personable. The directors like them. They don't know what they're doing, but they know how to put on an appearance. That's the biggest single danger that a business, and that person stays and runs it for 10 or 15 years and either stays in the textile business or the department store business and expands. I've looked at a lot of businesses, and that's what's caused the number one problem. And it isn't the kind of thing where they list them all because the lawyers tell them to list them.
Now that the crypto market overall is valued at $2 trillion, do you still consider cryptos as worthless artificial gold?
Well, I knew there'd be a question on Bitcoin or crypto. And I thought to myself, well, I've watched these politicians dodge questions all the time, and I always find it kind of disgusting when they do it. But the truth is, I'm going to dodge that question because we probably got hundreds of thousands of people watching this that own Bitcoin, and we probably got 2 people that are short. So we got a choice of making 400,000 happy or making 2 people happy. And that's just a dumb equation. So I thought about it. We had a governor one time a long time ago, but he would get a tough question, what do you think about property taxes, or, what should we do about school? A tough question, what do you think about property taxes, or, what should we do about schools? And he just walk off. Well, I'm all right on that one, and maybe we'll see how Charlie is.
Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success, and I don't hate the Bitcoin success, and I don't welcome a currency that I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. So I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. And I'll leave the criticism to others.
I'm all right on that one.
Mr. Jain, what has COVID-19 taught us about systemic and correlated risk? And is there anything that we will do differently from now on?
Yeah, in the insurance business, we often think about pandemic risk as one of the risk factors that we need to cope with. in our business. Having said that, I think the big lesson for us, having gone through what we've gone through recently, is that while we were aware of the fact that pandemic risk is a risk factor, it was totally will happen at most once in 100 years, and even then, those odds are pretty high. So I think the big lesson for us is to recalibrate and rethink about what the return time is for something like a pandemic risk. And separately, we haven't yet done a good enough job as an industry, in terms of correlating the risk and aggregating the risk. And pandemic risk has obviously taken people's lives. But then separately, a bunch of us used to write something, event cancellation or contingency policies. And in terms of pricing for the contingency policies, like the Olympics being canceled, NBC would buy insurance for their rights, which might suddenly be not worth much. And when pricing something like that, we would think in terms of earthquake and risk, and more recently terrorism, but we would never factor something like what portion of the price should come from the pandemic exposure. So I think the industry will become a lot more sophisticated in terms of thinking through what is the impact of pandemic risk across the entire portfolio, as opposed to it just being localized to one or two areas.
And I'm sorry, Don asked if anyone else on the stage wanted to comment after Ajit on that same topic.
I missed that.
Oh, he was just looking if anyone else on the stage wanted to comment on that.
Well, as Ajit mentioned, people were throwing in, an event cancellation. I mean, lots of people buy insurance against the Olympics being canceled or the United States not participating. I mean, they try to think of all kinds of risks because they have ad campaigns based upon all. So there's a lot of event cancellation insurance, and it was probably underpriced the implicit part of that premium that was attributable to a pandemic risk. I mean, Bill Gates gave a terrific talk at TED 5 or 6 years ago, and people ignored it. It's very interesting because this isn't a worst case what we've seen, and yet it's staggering in terms of what has happened, and people that wrote insurance that they may have found out sometimes that they were covering things they didn't even intend to cover, and maybe the insurance didn't think they were buying, but nevertheless, after the event occurs, that they get very inventive in coming after them. There are certain risks too that are just too big. The nuclear risk, for example, I mean, the federal government is very early on, they recognized that the private insurance industry, they can't handle the risk involved in the financial risk that would be involved in terms of a massive nuclear strike or something like that. So it's the pandemics. The wording will be much more careful in future policies on trying to define it very precisely. And incidentally, I mean, in the way the cases have come so far, in the United Kingdom, and I think there was one particular insurer. I mean, the cases are coming down much tougher on insurers in the United States. I mean, the policies were just written differently. You don't get insurance against something you don't buy against for, and generally the court decisions have come down favorable to insurers, and at Berkshire it just so happens we are not a big player, but that's in commercial multiple peril, which might be where it is not a huge factor for Berkshire.